At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, November 1st, 2023, why SoFi's $7.58 price tag is a stock market steal? SoFi has continued to defy the odds, and shares are trading at an attractive price. With an end to the federal moratorium on student debt repayments, SoFi will enter another period of rapid growth. Despite Federal Reserve interest rate hikes and a banking crisis earlier this year, margins and profitability have continued to meaningfully expand in 2023. SoFi's management team has successfully executed on past strategic initiatives, which could signal positive news for new initiatives like the Galileo product. SoFi Technologies, Nasdaq SoFi, is a leading online platform that provides a range of financial products and services, such as personal loans, mortgages, student loans, investing, banking and insurance. The company has grown since the Great Recession, which saw many traditional banks retreating from unsecured personal lending and mortgages. Moreover, SoFi has expanded into new markets, including crypto trading, robo-advising and credit cards. SoFi's stock is trading around $6.88, well below where the stock closed on its trading debut in June 2021. Current secular trends prove the company is undervalued and poised for a strong rebound in the coming months. Here are 3 reasons investors should be bullish on SoFi. Student loans to boost SoFi stock. In a prior article I mentioned how student debt would be a catalyst to bring shares up to $16. Hence, SoFi's student loan business is a key reason to be bullish on share price growth. SoFi is one of the largest providers of student loan refinancing in the U.S., with billions of loans originated since the platform's inception. This part of SoFi's business has been its most profitable for a while until a COVID-era federal moratorium put a pause on student debt repayments. Because of this, SoFi's growth and profits in this segment took a beating. The moratorium harmed financial results so much that the company tried suing to get the moratorium rescinded. However, as payments resume, borrowers will likely seek more refinancing options to lower their interest rates and monthly payments. This will create a huge opportunity for SoFi to grow its student loan business and generate more revenues and profits in the long run. Expanding profitability margins. Because SoFi has a significant lending business, it's important to look at both EBITDA margins and net interest margins. Net interest margin is the difference between interest earned on interest-bearing assets, student loans and mortgages minus any interest paid for deposits or other liabilities divided by the total number of interest-bearing assets. As nominal interest rates have gone up, SoFi, like many other financial institutions, has improved its net interest margin. In SoFi's latest fiscal quarter, for example, the company saw NIM improve from 4.38% in first quarter of 2022 to 5.99% in third quarter of 2023. Similarly, SoFi has also achieved record adjusted EBITDA of $98 million, up 121% year-over-year, representing an adjusted EBITDA margin of 18%, up from 10% in third quarter 2022. These critical metrics improving significantly over time has shown the business can continue growing even during times of economic uncertainty. SoFi executes on strategic initiatives. SoFi has executed well on strategic initiatives in the past and could continue to do so in the future. In 2022, the financial group pursued and received approval for a national bank charter, which would help lower its cost of capital, increase its lending capacity, and enable it to offer more products and services to its members. While pursuing a national bank charter stands in stark contrast to how SoFi positioned itself when the company first got started, the choice is perhaps a pragmatic one which could help lower consumer costs in the long run, thus helping the business to expand in the future. SoFi is also expanding its international presence through its Galileo product, which the company brought onto the platform via an acquisition back in 2020. Galileo provides technology solutions to fintech companies around the world. The product added around 8 million new accounts in third quarter of 2023, increasing 10% on a quarter-to-quarter basis. These successful pursuits show the platform not only has the willingness to grow but also has the capability and correction execution to do so. Thanks for watching.